Hey, what is up YouTube? This is Leo with DRIPCalc, and about a month ago I made this video called YMAG 2.0. It's basically a video about synthetic MAG4 ETF, where you basically strip out GUI, MSFO, and APLI from YMAG and create your own ETF. You split $10,000 or whatever money you put into it equally into these four ETFs: AMZY, FBY, NVDY, and TSLY, and compares the total return since the inception. As you can see, YMAG 2.0, or as I call it, MAG4, has returned about 50% more than YMAG. Okay, so lo and behold, or rather because this guy or lady, DRIPCalc, commented that, you know, it's not interesting to have these comparisons from the inception because nobody buys on inception. It's better to go from when they started going weekly. And my response was like, that makes no sense. But then I was thinking about it, and I'm like, there is a point to that. What if a person wants to compare different time ranges? And so I actually made a tool that allows you to do that. You can basically set up your own start date until inception. Or, I mean, until today. I'm not going to do 2 dates like start and end, because that's completely, in my opinion, unnecessary to check like from here to here. You know, you might want to check from here to here, or whatever date you choose. Okay, so I made this tool, and there's a lot more to it. I actually spent 50 hours working on this, and so I'll explain all of that in this video, and actually a derivative of this tool that will be a lot more usable by people who are not into YieldMax stuff. And that tool is right here, and it allows you to actually select your own ETFs or your own stocks and build your own portfolio and compare them. So I'll show all of that to you. But guys, before we begin, I ask you to please smash that like button. It really helps a brother out. Like, I've literally legit spent 50 hours working on this thing. Like today alone I spent like 8 hours on this thing, and so I'm tired. I wanted to get this video out to you as soon as possible, but I was spending all my time making this tool, so a like will really help. And also, if you're not subscribed yet, make sure to subscribe to the channel. I'll be making a lot more videos because I'm pretty much done with all of this YMAG nonsense. Especially that, like, for this video I actually used like a spreadsheet, and now it's all done on the fly. It gets all the updated numbers, dividends, prices, and so yeah. Second thing, this video is not a financial advice. I'm not a financial advisor, so if you want to make an investment, seek professional help. Not from a mental doctor, but like professional investment advice from a registered professional. Anyway, guys, okay, let's jump into it. First couple of news. The markets have been down. We didn't have a year-end rally, and we're down from all-time highs. Tesla took a nosedive. Palantir is nosediving. A lot of stocks are going down. Bitcoin is down to like $91,000. Government is selling, well, Biden government is selling Silk Road Bitcoin. And as far as YieldMax news, we had a pretty bad week. Oh, bad as far as prices go. So everything is down together with YMAX, and most of YieldMax funds are down. But also we had the lowest distributions cumulatively of all time. I believe that we haven't had a single payout over $1. Coney was the highest at like 84 cents. Everything else was much lower. And so next week YMAX payment will be kind of low. At the same time, maybe not, because like Coney is really cheap now, and it is like $13, and because it's equal weighted, they'll have a lot of Coney in the YieldMax, in YMAX ETF, so it should probably be not that bad. But anyway, this was pretty bad. Okay, so let's jump into this whole thing with YMAG. Once again, I believe that YMAG is not as good as this synthetic NVDY, TSLY, AMZY, and FBY. And a cool thing, guys, over here. So right now, last price for TSLY was $13.80, and when I made my video a month ago, the price of TSLY was $15. So it's down by like $1.50. Not bad, but it did pay a really nice dividend last month. Anyway, so this tool, it is still work in progress. I will be making it better, but right now what you can do is check or select your own, you know, start date when you want to start comparing the two ETFs. And basically at the end of September they started paying weekly. So if you go from like October 1st and click compare, it will start the comparison on October 1st, and you can see that YMAG is still underperforming and MAG4 is still doing better, and it is doing better by another 50% in total returns. So yeah, it is it's still a lot better than YMAG, because, you know, the GUI and MSFO and Apple, they really drag it down big. And by the way, GUI had a really nice payout this week, so even with that, YMAG still outperforms. But the thing is that first of all, not everybody wants YieldMax. You know, there's a lot of people that think YieldMax is stupid, and the NAV will go down to the to zero and whatever. And so I made a tool where you can actually enter your own tickers and you will get the same results. This tool is still work in progress, so it will take me a little bit more time to polish it off, make it cooler, but and also add this chart to it. And by the way, this chart is also not finished. So if you look at this, you can find this tool over here under compare. Maybe I'll move it over here next to YieldMax links, but it's in one of either under compare, menu, or under YieldMax, because this is basically a YieldMax related link. But the problem with this chart is, for some reason, if we select the last date, you can see that YMAG, the total value of YMAG is 13,637, and over here we get 13,549. So somewhere in my code, it's accumulating shares a little bit faster than in actuality, or than in reality. And while right now it's only it's actually less than $100. But over time, as time goes on, that will snowball into something much bigger. And so I need to find that inconsistency and fix it. And so that's been taking me a while again. So if it's not this, it's that. And so I'm still working on that. Once I polish that, I will add it to this four-way compare tool. Another thing I've added to this, guys, is the return of S&P 500 versus YMAG and versus MAG4. And you can see, regardless whether you reinvest dividends or not reinvest dividends, S&P 500, as well as it did in the last year, I mean, 20% return on SPY is amazing. Its average annual return is 10%. So it's like double the average, and still YMAG significantly outperformed SPY, and MAG4 just like completely crashed it. That's like over 150% outperformance versus SPY. So again, it's not a financial advice, because these funds can crash. Now the MAG4 and MAG7, they are more stable than a lot of other YieldMax funds. You can see over here the sea of red, like over here especially, starting with crash. Now crash, all these guys, they're inverse ETFs. I don't have a single one of them. OLT is red. These poop ETFs are red. There's just a sea of red over here. It's not fun. It's crazy. But yeah, the only two ETFs that are green all around are MISTI and NVDY. They're green on the price return, and they are green on the dividends and with reinvestment or without. No, actually NEFLI is up 1.1% on the price, and actually this is in the last 12 months. So so it's not since inception, it's the past 12 months. Actually over here we have PLTY, which is also in the green. So I wasn't correct on that, but basically 4 out of, I don't know how many, 30 ETFs, only 4 are green all the way. Some of them are still not doing bad, but look at this. Anyway, so that was the point, that that these funds are relatively risky, and so you shouldn't jump into it. But the tool I created here, I think it's amazing. And for example, the way you can use it is, let's say you want to compare XLE, which is energy ETF, versus like big oil companies. So XOM, obviously, then which is ExxonMobil, then CVX, which is Chevron, Occidental, which is like Occidental Petroleum. It's Warren Buffett's favorite oil stock. I think he's been selling Chevron and buying Oxy. I don't like Oxy because I think so I don't know if you're much into oil stocks, but basically like Oxy is one of their big things is doing basically putting CO2 emissions in the ground, and I think it's kind of stupid, especially now that Trump is president. All that green stuff is gonna go out of the window for a while. And so anyway, so PSX is another good company. So let's compare them, and you can see here it's quite interesting that MY4, so here I call it MY4 instead of MAG4, but it has actually underperformed XLE, which is energy companies ETF, sector spider ETF. And so if you just invested in XLE, you would do better than these 4 companies, and that's in the past year, so the past 12 months. Okay, and your drag down are PSX and and AMZY. However, if you look at PSX stock, let's open another window. PSX actually has been doing really well until recently. I've had it and I bought it at like 91 before it ran up. Then I sold it at like 105, so I only made very little. Philips 66. So I bought it like over here somewhere. Yeah, like in this range, like 91 something. And then I sold it like, it ran up just a little bit, 105, and I sold it. So I missed this whole run up, and then it crashed. Now I do think oil stocks are overvalued, severely overvalued, and so I actually sold a big chunk of my XOM or ExxonMobil. But and I've made a few videos why I think oil stocks are overvalued. I think it's since the current valuations are insane. But that's a point for different video. So the point is here that this compare tool, you can, but if you select different dates, so if you select, say, 2021, okay, so that's past 4 years, and you compare, you can see that XLE still outperformed the, you know, your synthetic MAG4 ETF, but you can also see that XOM and Occidental Petroleum did better than XLE. Now, so these two blocks, this is with the dividends reinvested and dividends not reinvested. So this last 4 rows, dividends not reinvested. And you can see here, this turned green while this one is black, because if you didn't reinvest your Oxy dividends, you actually made out better than if you did reinvest. So that shows that dividend reinvestment doesn't always work, but usually it does. Most of the stocks perform better with dividends reinvested than without. But even more crazy, guys, and I think this is such a cool tool because it allows you to check multiple stocks at once. And so if we go back 10 years, okay, check this out. Check this out. 10 years ago, you only returned 54% on XLE. So that's compounded about 4.5% per year. Okay, it's not 5.4% because like it's 4 something percent on 4 something on 4 something. But oil stocks have severely underperformed the rest of the market over the last 10 years, even with dividends reinvested, even though they pay high dividends. Okay, look at this. Even like ExxonMobil only did 70%. CVX, which had a second best performance, 93%, and PSX had a 119% total return. And so just for shits and giggles, I was going to open a different window, but we can put SPY in here, and you will see how well S&P 500 did, and mostly on overall market growth, 287%. So it was way better to just invest in S&P 500 than oil companies for the last 10 years. But if you play with different dates, you get different results. So this tool like offers you so many possibilities and options, and also because like you can make your own, you know, so to say, ETF with 4 stocks. I might add like an option to add up to 10 stocks. That will take me some time to code because I'm still working on the chart and all of that stuff. But once I make this tool possible, that will be like, I think it's very useful just to compare historic performance of different stocks. And for example, if you on semiconductors, okay, what's the semiconductor? Semiconductor ETF, I think it's SMH. SMH, yeah. So let's compare SMH. So that's the main stock. So okay, here main stock is the one you're comparing against. Okay, and I will add a SPY as a default option here also, just so you don't have to actually use one of the 4 stocks. So SMH versus, okay, we're not going to use NVIDIA because obviously NVIDIA outperformed. Okay, let's try so AMD, Intel. I know AMD will be a winner and Intel will drag the whole thing down. Then we can try Texas Instrument, TXN, and say Marvel. I don't know if Marvel actually existed 10 years ago as a stock, as a company it did, but let's see. And they will actually select the earliest available date. So okay, one of the stocks actually started trading on January 31st, 2019. That's why that date is selected, and I think it's Marvel. And so comparison, it automatically changes the start date. Okay, and so we therefore want to check something else. What's in SMH? Let's see what's in SMH. Actually, I should have this thing. I should have this because I have these ETFs. Where is this thing? Dividend ETF. So I should actually add SMH to it, and then I'll have my own data because because anyway. So I'm not going to do that right now. Let's see what's in SMH holdings. TSM, that's Taiwan Semiconductor. AVGO did amazing. So applied material. Let's try AMAT. So you can check your own. Yeah, let's do instead of Marvel, we'll do. So we already have TXN, which is Texas Instruments, and why is it? Yeah, here is Texas Instrument, TSM. Man, too many things opened. And let's change the date to 10 years ago. Actually, no, that would be 2015. That's 11 years ago, 2014. I'm still living in 2014, guys. Okay, and okay, all of the stocks existed 10 years ago. So January 9th, so 10 years ago. Yeah, so all of this stock existed. That's why it's allowing you the date. If one of them is newer, that will be the start date by default. So that the tool itself already, like, you know, very intuitive and accounts for all of that stuff. So your comparison is actually equal. And look at this, AMD. Well, it is funny because AMD had like one dividend payment. And because of that one dividend payment, it thinks that no DRIP option is better than DRIP. But doesn't matter, 4,500%, so 45x on AMD. And you can see SMH underperformed MAG4 by about 40%, 50. No, that's like almost 60%. Okay, and that's primarily because of AMD. Let's check another stock, Qualcomm. So basically, you can create your own ETF, so to say, synthetic ETF, QCOM. Now, most people will not make a synthetic ETF out of, 100 stocks. Like, you're not gonna make your own SPY by buying stocks in 500 companies that are in S&P 500. It's just easier to just buy SPY, But if you don't want like certain companies, you can create your own portfolio, synthetic ETF, and this tool allows you to compare returns of them. And see, with Qualcomm, your return is much worse than with AMD. Well, does that mean that AMD will perform the same? Probably not. But AMD was like double the price it is right now in just like 6 months ago. Let's look AMD. So it had a really nasty drop this week, and over here, so like it was above 200, and right now it is 120. Cool. So almost 50% drop from like all-time high, and you can see 227. Hot damn. So it's $110 drop. Basically, it's at the bottom of 1 year range. So if we look over here, it's open. Yeah, so this is the top, and we are now near the bottom of this 52-week range. And I'm not sure, like, it's a nasty downtrend, guys. Will it go up at some point? Will it go up now? I'm not sure. I mean, by the way, I want to make a video about NVIDIA. Video about NVIDIA. That's yeah. Anyway, so guys, I think this tool is amazing. Now I will add. You can actually click on this name, and it will take you to the stock page like this. I already have it over here. Where's that company? Okay, so over here I already have it. But because I'm still developing that 4-way compare tool, I didn't add it there. But you can actually click on it, and it will open the stock in a new page. And why is this important? I'll show you. Wow, look at Tesla. It started out performing like crazy with dividends over here. Anyway, why is this important? Because once you open this page, it gives you all the earnings details and all the share buybacks and the dividends and the revenue, and then earnings per share, EBITDA, net income, free cash flow, profit margins, gross profits, your expenses, share buybacks, okay, stock-based compensation, and also analyst ratings. So all of this is available if you click on the individual stock. And also another cool thing is actually you can compare two stocks side by side. So same thing, but you actually compare, and here you can select years to go back, end year, and many other things. But here you have the same metrics, but you see them side by side. So here Microsoft, Apple, we can actually compare, say like NVIDIA to AMD. And obviously NVIDIA did better, but AMD is no slouch. in the last 10 years. So 29,000% versus a measly 4,500% in 10 years. Wow. Yeah, I mean, AMD is a sucker. But yeah, so here you have all these metrics side by side, okay, for each company. So free cash flow to free cash flow per share gives you right here for each of the companies. And I guess, so here, this was actually negative for NVIDIA in 2022. And here is free cash flow to EP compared versus EPS for each quarter and for each company. And here's free cash flow to stock-based compensation. You can see that NVIDIA is just printing money. Like the free cash flow is less than 10% of its, I mean, the stock-based compensation is less than 10% of its free cash flow, whereas AMD, it's almost the same. And over here, they actually had more SBS or stock-based compensation than free cash flow. So this is, this just show in like, based on this, you can like, okay, is this company doing well? Is this company going to do well? Look at this, cash is dwindling for AMD. The revenue, it was growing over here, but like, not so much in the last 5 years, in the last couple of years, you know. And so you have all this information right in front of you. It is very useful. And then you can make historic comparison. And like I said, once I make this tool available, I'll add like a SPY as a SPY and maybe Qs over here just for comparison when I finish that. And once I finish this whole chart thing, because it's there's something off with the chart. But anyway, guys, yeah, so a lot of work went into this, and so I appreciate you watching this. I would really love you to smash that like button. I'll make this tool available if you're into dividend stocks or growth stocks. This compares all of that stuff for you on different historical time frames, and you can modify your investment. So just quickly, how does MAG4 work? It basically takes hypothetical investment and compares it to your main stock, but it breaks down your investment into equal parts. You can see here the start is like $2,500 in each of these stocks, so equal weight in the beginning, but then it doesn't like reshuffle it, it doesn't recalculate. So whatever you bought in the beginning, that's what you have. And then if the company pays dividends, you can elect dividends. And as you can see over here, all of these companies do pay dividends, so that's why you have dividends numbers. If it was company that doesn't pay dividends, it would be just stock price return, stock appreciation. Also, we have this table over here that basically shows you each dividend and how many shares and what the dividend amount on that date. And obviously, because it's 10 years, this is a pretty big table. And then just the dividend per share for each of these stocks. Okay, and from here I removed MAG4 because obviously like it doesn't have a dividend per share. It's mixed between the stocks. You can see they're all on different dates, but yeah. So guys, a lot of work went into this, so I would really appreciate if you like this video. I'm going to publish this tool very soon. And again, smash the like button, subscribe to the channel. One more thing, we're still running our new Year sale. It will end in January, end of January. And so if you want to try these tools, it is 2-week free trial. You get 30% off on this. So if you just click on this, you can try it for free for 2 weeks. And if you sign up for a year, you get you get 25% off, and then additional 30% off on top of that. And you can see here, yearly access, you'd be paying like $79. That's about the price of a no, actually no, this is the price per year, $94.50. That's about the price of a frappuccino per month, you know. So yeah, you can try this out, guys. Thank you for watching. Subscribe to the channel, and I'll see you in the next video. I'm gonna start making a lot of options videos. Next one will be SoFi, how I'm investing in SoFi, that is up now that it's up 50%. Now, quick kind of spoiler, I don't buy much SoFi now because all my buying I was doing a couple years ago. But I'll talk about SoFi options, leaps, and all of that good stuff. And NVIDIA, I'll make a separate video about NVIDIA, and just like a lot of more content coming to the YouTube channel. So make sure you subscribe, and you'll get notified. And check out these tools. I'll see you in the next video. Bye.